All right. Testing, testing, testing. One, two, three. Testing, testing, testing. All right, my volume is good. Hello, everyone. Welcome to the YouTube channel. Today is Money Talk Friday. Today we'll be talking about all things dealing with money and economics and so forth. Today is June 1st. Half the year. Half the year already. Half 2018 is gone, and half 2018 is in front of us. Summer is here, so I hope you all are in a place where it's nice and hot, nice and sunny, for you all to enjoy the weather. As you all know, on this YouTube channel, Mondays, we speak on AI, automation, and VR, virtual reality, and all topics dealing with those subjects. On Wednesdays, we speak about geopolitics and all topics dealing with that main subject. And on Friday, we talk about money and all topics dealing with that subject. So today is Friday, and we're talking about money. A lot of people have gotten paid today, so I'm sure a lot of people are out spending money, either it be frivolously, responsibly, or other. But nonetheless, a lot of people are out spending money. But you are here, tuned in to this hangout where we're going to talk about how we can A, make money, and B, invest our money to make more money. Have our dollars work for us to get more dollars. So with that said, I've filibustered long enough. I want to get into some of the topics we'll be talking about today. Of course, we will touch on cryptocurrency. Of course, we will touch on stocks. Of course, today we'll also touch on the greater economy, how it's doing. Again, I want to express and stress that this channel and the people on it are not financial advisors. If you would like a financial advisor, I always say go to cfp.net, Certified Financial Advisors, and type in your area code, city, or state, and you can identify a financial advisor in your vicinity. Always, if you want to find out something, Google is your friend. Google is your friend. Here, we're just giving out ideas to help expand your mind and to help you think in alternative ways opposed to just using your money, techie, and use your money and spending it on things that in the next few months you won't have anymore. So, like I said, go to cfp.net to find a certified financial advisors. All advisors on that website is certified by the that board, CFP board, to be financial advisors. They are the real financial advisors. You can always go there to get financial help if you do need it, any advice. And like I said, Google is your friend. If you want, if you want to find out anything, Google is your friend, and simply go on that site, cfp.net, and find a financial advisor in your vicinity. So, with all that said, it is time to get the show going. Welcome to Money Talk Friday, and I see we have another host. How you doing, Mike?
Hey, what's going on, brother?
I'm well. I'm well. How's your day, Friday?
It's good. Yours?
It's good. It's good. It's all right.
Yeah.
All right, let's go ahead.
No, 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 I didn't see anything.
I'm going ahead and share my screen, and we can get right into the show. I'm sure other people will jump right on in. So our first topic today comes from ccn.com, and the piece Bitcoin Price Analysis by Crypto Wallace Cheap, says hedge fund manager. I read the article. The cryptocurrency market has languished in recent weeks as a widely anticipated Bitcoin price rally has yet to materialize. However, Dan Moorhead, founder of cryptocurrency hedge fund Pantera Capital, says that now is a perfect time to buy. Speaking with CNBC, Moorhead noted that the Bitcoin price has broken below its 230-day moving average, an event which has historically proven to be an excellent trading opportunity for investors willing to purchase Bitcoin and hold onto it for at least a year. Without even thinking about it, he said, you make an average of 239%. That's the essence of this trade. It rarely ever gets cheap to its long term average, added Moorhead, a former Goldman Sachs executive. So today is a good day to be buying. Moorhead, as CCN reported, correctly predicted that Bitcoin would see a massive correction from its mid-December highs. However, a subsequent prediction that the market was beginning to enter a bull cycle perhaps jumped the gun because the Bitcoin price stalled at $9,990 and dipped back down to a present value near $7,500. Nevertheless, Moorhead said that Pantera is still experiencing positive returns, largely because it has diversified its portfolio to include a range of crypto assets. He said that the firm currently holds investments in approximately 35 initial coin offering or ICO tokens, as well as 25 liquid cryptocurrencies. He is particularly excited about Agar, whose mainnet prediction market is preparing to launch after years of development. All cryptocurrencies are very cheap right now, he said, but it's much cheaper to buy now and participate in the rally as it goes. He advised investors to enter the market sooner rather than later so that they will already have strong positions once institutions become comfortable with making strategic investments in the space. Many institutions are essentially buying the rumor and selling the fact, he said, of concerns that the government will impose new regulations on the space. Getting invested now so that in 3, 4, 5 months, when the institutional quality regulated conditions, excuse me, getting invested now so that in 3, 4, 5 months, when the institutional quality regulated custodians that that we are hearing about come online, they'll already have their positions. Now, Mike, you emailed me this earlier, and I read it, and I agree we should speak about this. What are your thoughts about this?
I just find it interesting that the article came out right about this time with all the sanctions and the tariffs going on between Europe and Canada and Mexico and Venezuela, Iran, China, and countries are starting to look for alternative methods to get around the dollar. And this article is basically saying, get crypto while it's cheap. Well, if you want to get around the dollar, now's the time to pick an alternative.
Yeah, that's a good way of looking at it, because when I read it, I automatically thought about it in a vacuum, and what I thought about was, okay, yeah, it is about that time for cryptocurrencies to start to bounce up, especially when he pointed out that it's below its 230-day moving average. And obviously, around this time last year was when the crypto market was starting its bull run, which resulted in $20,000 Bitcoin, a $20,000 per Bitcoin price at the end of December. Around this time last year was when it was cheap, even cheaper than it is now. But now that you said, yeah, all these countries, these countries are putting tariffs on one another. It's like they're saying, okay, you're going to put a tariff on me, I'm going to put a tariff on you. Then other countries putting tariffs on other countries and vice versa. That's going to stagnate their economies, obviously, if they, depending on what type of trade deficit they're in. Now you have this cryptocurrency, which can literally get around that. It's as as they say, may you live in int- interesting times. Ah,
I haven't even personally, I haven't picked out a crypto at this moment to jump on while it's cheap. Just still looking around, but hopefully we'll get through the broadcast tonight and try to figure out uh, what the market looks like in terms of the your spikes and your dips and your charts if dollar will comes on.
yeah, yeah. Hopefully he comes on. I sent him an email. Just looking at the cryptocurrency market cap, the coin market cap, or cryptocurrency market cap at coinmarketcap.com. Obviously, it's a mixture of green over here, the 24-hour change. It's a mixture of green and red. Average prices are in their average is about average what they've been in the last couple months. Nothing too spectacular. Big obviously Bitcoin is 7,500, just like the article said. Like I just read, the top the top coins. Right, EOS. I like EOS, and EOS mainnet has started today, I believe. So there's a lot of people speculating that its price may jump, and it in the past month, in the past few months, I would say in the past year, dating back to last year, this time it has been touted as an Ethereum killer, but we'll see. It's mainly starts there, but yeah, the cryptocurrency market, it it is what it is. But if Dollar Will comes on, I know we'll be talking about some good things, some very interesting little ideas. Um, Another thing I found interesting, again from ccn.com, the piece that says Washington-based Bittrex lists USD trading pairs after landing banking partner. Before I read this article, I'm going to look up Bittrex, the exchange, to have everyone um, give everyone an idea of how big Bittrex is. Let's see, Bittrex is. Let's see. Take a look at the website. This is Bittrex exchanges. Let's look up exchanges because I believe you can look up exchanges on the market cap, and you can see uh, its rankings. But Bittrex, I think what it is, the amount of money on Bittrex right now is 70,006,732, which is worth 9,359 BTC. Now that is not a small amount of money. What I will do is compare it to Binance, because right now Binance is basically the king of exchanges. And Binance is 1 billion. Again, Bittrex is no pushover, but let me read this article. All right, Washington-based Bittrex lists USD trading pairs after landing banking partner. Prominent U.S. cryptocurrency exchange, Bittrex will offer USD trading pairs to customers in select states now that it has found a banking partner, the firm announced on Thursday. Bloomberg reports that the Seattle-based exchange has signed a banking agreement with New York-based financial institution Signature Bank that will allow it to begin accepting USD deposits and listing cryptocurrencies for trading directly against the dollar. That is interesting, especially since it's coming from New York. Since its founding in 2013, Bittrex has served as a crypto-to-crypto exchange, facilitating trading between different cryptocurrencies but not against fiat currencies. The venue has listed USDT, which is US dollar tether, a dollar pegged stablecoin created by blockchain startup Tether. But this token cannot currently be reliably redeemed for physical greenbacks. The exchange currently ranks as the world's 18th largest cryptocurrency exchange, with a daily volume of approximately $100 million. This will likely increase now that the platform has become one of a small group of venues to support fiat to crypto trading. It's been a long path, Bittrex CEO Bill Shihara told the publication. It's not just about banks being able to trust Bittrex. It's about banks being able to trust crypto in general. And I think it's really showing that crypto is turning the corner in terms of mainstream acceptance. Finding a banking partner has long been a struggle for cryptocurrency exchanges, as most institutions are hesitant to serve companies involved in an industry that is often perceived, perhaps incorrectly, as a haven for money laundering and other illicit activities. I got a thought on that. Bitfinex is said to have kept its fiat to cryptocurrency trading pairs aloft by using a string of third-party accounts after Wells Fargo severed its banking agreement last year. Though the firm reportedly found a permanent solution in Puerto Rico-based Noble Bank, and I know you might got a thought on that one right there. Even Coinbase, one of the most respected names in the industry, has largely been forced to rely on smaller banks willing to take a risk on companies in the nascent but booming industry. The company made headlines earlier this year when its UK subsidiary signed an agreement with Barclays. They really do look and pour through the entire business, said Shihara, a former security engineering manager at Amazon of Banks. A former security engineering manager at Amazon of Banks. Okay. They want to make sure that we've got robust AML, which is anti-money laundering, and KYC, which is know your customer processes, that we've got the right controls on our finances. They do background checks and everything. They really look at our business soup to nuts. All right. What do you think about that?
That's something that the market has been yearning for.
Yes.
And us being Black Americans, I just wonder what the Black banks of America are thinking at this point. Do they see an advantage to becoming a partner with Bittrex in order to leverage, some of these transactions from crypto to fiat? because if they're such a smaller institution, it can go unnoticed.
Mm-hmm.
Right? I mean, black banks are not plentiful around the country. There's less than 10. You know, you can count on both hands. But the problem is they're not solely in. There's not a whole lot of availability from a brick and mortar standpoint, and cryptocurrencies are largely online, so you have to use some form of smartphone or some kind of device to actually access it. So if I'm a black bank, how do I take advantage of these cryptocurrencies while still maintaining my core base, which is African Americans or black people or people of color, black and brown, or whatever you want to call them, and how do I increase transactions as well as revenue for from quarter to quarter? I think this is a perfect opportunity for a black institution to actually step in.
Yes. Because they did just point out, a lot of smaller banks, Coinbase has been able to partner with a lot of smaller banks because they like you said, they go under the radar. It's not going to cause a lot of commotion. Now, another part in this article which said, okay, where's it at? Yeah, Bitfinex is said to have kept its fiat and cryptocurrency trading pairs aloft by using a strong third-party account after Wells Fargo severed its banking agreement last year, though the firm reportedly found a permanent solution in Puerto Rico-based Noble Bank. Now, in previous hangouts, we've come to the conclusion and that Puerto Rico is becoming a blockchain haven, the cryptocurrency haven. Bitfinex, which is another large exchange, has found a permanent solution in Puerto Rico-based Noble Bank. That's big news within this already big news piece.
Exactly. Because Puerto Rico is a commonwealth of the United States. They're not an actual state, so they're not beholden to all the same policies of an actual state within the union, within the federation itself. So they have the flexibility to to play around with cryptocurrencies, and that's making them become the Caribbean hub of cryptocurrencies.
And now that this news is coming out about now, how am I trying to put? Now that the landscape is starting to become clearer and clearer this year concerning cryptocurrency, people starting to make their moves. A lot of projects. When I say projects, I mean coins. They're starting to hire. There's like in the technology space, each company would take, how to say, their developers from each company to. So Apple would take somebody from Google would take somebody from Apple, and so forth. These companies, these cryptocurrencies are starting to do that same thing. And even in this last paragraph, Shihara, which is he is the what did they say? He has something to do with Bittrex. He is a former security engineering manager at Amazon. So he's no one to look over. He obviously know what he's doing. He's obviously know what he's talking about. So this is starting to shape up as something, to be looked at as serious because they have these people that are in high positions and they're going to these crypto exchanges, these coins, and they are advising these developers on the right avenues to take. Hmm. What I can't quickly find what's his position in Bittrex. Oh, okay. Bittrex CEO Bill Shahara. I should have remembered that. But he's the CEO. Hmm. Yeah, I like that. Let's see what else going. Go ahead.
No, I was just going to say because they this CEO that came from Amazon. Most of these people who work in compliance and security um, have been following, the white papers of Bitcoin and the blockchain, probably since the last 5 years or so, right? So once you get a better understanding of the framework, then you start applying your ideas to the framework and customizing it to what you want it to be, and this is how you end up with platforms like Bittrex.
Hmm. And I didn't know Bittrex was based in America. For some reason I did not know that. I I because most exchanges are not based in America. Then you have the decentralized exchange, but I only really thought Coinbase was the main one in America because since it was basically the jump off point for a lot of Americans to get into cryptocurrency. I don't know. I didn't. I don't know. I did not know Bittrex was based in America.
I thought Bittrex was German, but well, not German, but European. So I never really got into it. I figure if it's outside the nation state, then there's nothing I can do about it. I can't really. I mean, obviously I can get some kind of VPN connection, but I don't want to put myself in a situation that I can't get myself out of. So
Yeah, yeah. And actually, I think it was, Bitfinex. One of these exchanges, they banned American residents. This was, I want to say, late last year, even earlier this year. No, I think it was late last year. They were banning American residents, and a lot of American residents that was already on there and been on there and had been on there for however long they've been on there, started selling their accounts. So however much money they had in there, they would sell their accounts to other people, and people were buying these accounts with money already in them. I don't know how much it was. I never got uh, a number of how, you know a ballpark number of how much these people were paying, but people were actually buying these accounts, which you don't condone because the person that's selling it could have a backdoor way of getting in there, and you add money to it, and then they taking your money. But this was actually happening, and that goes to your point. If these exchanges are out of the country, they automatically say, "Hey, you being in America, if they have a know your customer policy and they know you from America, and one day they say, we're banning Americans, you have 24 hours to get your money." I'm not gonna say that. I want to create foot. That you have 1 week to get your money off our exchange, and it's just your luck that you don't check your account for a week and you try to go back in and you ban.
right.
Something else I saw, which was this article: India want India won't pay for Venezuelan oil with petro cryptocurrency. This is getting good, man.
Mhm.
I want to make sure nobody else is on here. Okay. Despite offering a reported 30% discount in crude oil imports from Venezuela for payment in petro, India has no plans to use the South American nation's cryptocurrency after being hindered by its central bank crypto curbs. Hmm. Indian Foreign Minister Sushma Swar, Swar, Swaraj was addressed was addressed reporters during a news conference this week when she was asked about a Venezuelan trade deal involving crude oil and a reported discount of 30%, contingent on the purchase being made with the Petro, Venezuela's state cryptocurrency. In response, the Indian foreign minister said the country has no plans to use the Petro in purchasing oil, citing an order from India's central bank which does not permit trade using cryptocurrency. The Indian official reportedly stated, "We cannot have any trade in cryptocurrency as it is banned by the Reserve Bank of India. We will see which medium we can use for trade. The Reserve Bank of India, or RBI, India's central bank, announced a crippling policy in April mandating RBI regulated financial institutions prohibit their clients and users from purchasing cryptocurrencies. Banks were also barred from providing services to businesses dealing with or settling cryptocurrencies. While it is while it is explicitly stated that the ban extends to transactions settled in cryptocurrencies, there is no surprise in the Indian government opting not to make a trade deal in the petro despite the substantial discount offered. Venezuela has the world's largest oil reserves for any nation and announced its oil-backed cryptocurrency, the petro, in December, in what will soon become the world's first state cryptocurrency. Devised as a payment instrument to combat the economic sanctions and a U.S. led financial blockade. The cryptocurrency has seen plenty of criticism from within the country. In March, Venezuela's National Assembly declared the unconstitutional petro a fraud. Notably, India about isn't fussed about U.S. sanctions facing Venezuela and Iran, the latter of which has now become India's top crude oil supplier. India India follows only UN sanctions and not unilateral sanctions by any country. So Waraj added, insisting India will continue to trade with Venezuela despite oil imports from the South American nation being at their lowest levels in over 5 years. Hmm. Thoughts?
Well, I mean, it's not so much as the problem with the petro itself, but more about internal politics inside India, inside New Delhi, doesn't allow for cryptocurrencies because the rupee is still, the fiat standard. So, and then you tack on to the idea of going about it an alternative way of purchasing oil on a discount. They're looking at the black market. They want black market prices, for gray market or clear market commodities, which is the oil itself. If they have to pay $100 a barrel for oil, then that can really hurt their domestic economic situation. However, if they can go about an alternative way and get a 30% discount, now you're talking $60 a barrel for oil. That sounds a lot more reasonable, and that's why they're trying to get around it.
Now, two thoughts well, really three thoughts now that you said what you said. The first thought that came to my mind was, okay, due to the politics and India passing a law that they will not uh, support their citizens banking wise who deal in cryptocurrency. If they were to make this move, obviously the people will rise up and say, hey, if you, the government, is making deals in cryptocurrency, we want to make deals in cryptocurrencies too. So they had to say no to Venezuela and its oil backed petro. Then down further, as I was reading, it was saying that they will, instead of getting their oil from India, Iran has now become India's top crude oil supplier, which is obviously, it- Iran is right there. So getting the oil from Iran, albeit you got to go through a few countries, getting the oil from Iran to India compared to Venezuela to India is much more easier. And then she put in this India only follows UN sanctions, not unilateral sanctions by any country. Um,
Meaning they're not a slave to the United States or a puppet.
mm, hmm I like she put that in there. I like that. That's. But still, they saying, hey, if Venezuela is saying you buy our oil with our Patreon, we'll give you 30% off. That's tempting.
Well, keep in mind that your OIC, which is the Organization of Islamic Countries, they have made $20 billion investment into the Petro already, just this year alone. So it's alive and kicking. It's just a matter of how do you create a bilateral exchange place for digital and crypto payments. A lot of these countries have not really figured this out, except for the Russians. The Russians are already working on SPF right now, and I don't think it will be finished until about 2019.
And all of this is starting to, albeit it's coming together. It's like breadcrumbs on a trail, but it's still coming together. If this jumps off, and Venezuela, which is a country, inflation is big. They trying things, and which I really give props to Maduro for doing this crypto oil-backed cryptocurrency. If countries say, okay, we'll buy your oil with your cryptocurrency because you're giving this high discount, and it catches on, me personally, that's more a log onto the fire of cryptocurrency becoming big. That's in my opinion. And
right,
we have other host, Dollar Will. He's in the chat room. I want to let him know that we want to ask him some questions if he's feeling hesitant not to come on. Some questions concerning cryptocurrency before we hop into our other topics concerning the stock market. So if he would graciously bestow upon us his presence and his knowledge, we will be thankful. Just what did we want to ask him?
You wanted to talk about the charts.
Oh yeah. Oh yeah, Bitcoin price. The analysis. Moorhead said buys while it's cheap.
As well as gold. Yeah, as well as gold and oil. Okay. I'm not sure if he's updated his charts for the week.
Let me get coin market cap. So when he come on, he can look at the. Ain't that something? Okay, but then because Bitcoin, when I first looked at the charts, it was like 7,500, and I want to say $5, dropped $6 in a couple of minutes.
It's going to have volatility.
Yeah. I mean, cryptocurrency is volatile as I don't know what. I kid you not.
Getting it together, fellas.
How you doing, Dollar Will? How you doing today?
What's happening, fellas?
This payday. How you doing today?
Let's see. Can you hear me?
Yes.
Okay, great. Okay.
Man, I tell you what, man. And some of the coins I have, I'll be in the Discord channel, and the amount of FUD and fear that these people have, because like we stated before, a lot of cryptocurrency is some people first time in doing any type of investment. Man, the level of fear these people have, it's like, God, like goodness, like it's like you would think the world is coming to an end, like the asteroid is 2 hours away.
Well, if you don't have any training in trading or any kind of guidance of technically how, and it really is a technical thing, how to read a chart, aside from the news. I'm not debating any of the fundamental points of views, especially the way Mike breaks things down, or even anti-gravity or Ulysses. I'm not disagreeing with any of it. It's just that the charts allows you to put a time factor on when these things might happen. And so without that kind of guidance, you have no choice but to be fearful. So learning technical analysis brings a calmness and put some put the news perspectives that you're hearing into on a timeline, so you can be emotionally even going through all of this.
Now, did you hear the first article I read for the night?
I just came on just before you saw my name come up.
Okay. It's a part in the article. The title of the article was Bitcoin price analysis by Crypto Wallace Cheap, says hedge fund manager, and a specific paragraph in the article which states the hedge fund manager name is Dan Moorhead. He's the founder of cryptocurrency hedge fund Pantera Capital. He says, speaking with CNBC, Moorhead noted that the Bitcoin price has broken below its 230-day moving average, an event which has historically proven to be an excellent trading opportunity for investors willing to purchase Bitcoin and hold onto it for at least a year. Without even thinking about it, he said, you make an average of 239%.
Okay, I'm not going to disagree with what he said, and not that I would if I. Okay, when he said hold on for a year, with the considering the volatility of Bitcoin, I believe Bitcoin could go down to the $3,000 level. $2,300 to $3,000 level. I believe that's possible looking at the charts. Okay, and he's right. When you see like the 200-day moving average, long-term moving averages like that being violated, that's not something that a strong stock does. Okay, you figure if it's just 20 weekdays in a month, that's that's 20 days. 20 times 10, that's 10 months. So a 10-month average would represent like a 200-day moving average. For any stock to show that type level of disfavor, that's pretty serious. Now, for someone who doesn't know how to read charts, he's saying when you buy below, and a lot of people are taught that, when you buy below the 200-day moving average, you're getting it at a steep discount. And he's right. And in a year's time frame, given the volatility of Bitcoin, you could be cash positive in that time frame. Now, someone that knows technical analysis, they're not going to jump in just because it went below $200 when we could possibly drop 50% from here.
Mm-hmm.
So he's, I don't, considering who his audience is for that article, he's talking to people who not really technical traders. So I can understand why he gave that advice, and he's right. This is discount prices, but for my channel, I encourage people to try to learn technical analysis instead of being fearful right now. This is the time in the stock world when things are trending down. This is a time to study, learn about companies that you might want to buy when the bottom comes. And I'm saying learn technical analysis so you can have a good some guidelines to really kind of let you know what a reversal looks like, what a price reversal looks like. So instead of buying now when it may drop 50%, you're not going to get the exact bottom. I'm not saying that. No, I don't know any technical trader that says that you can get the exact bottom, but can I come within 5 or 10% of it pretty consistently? Okay, so that's the trap when people say, well, nobody can time the markets. No, nobody's saying you can time the markets exactly, but can I get in very close to the bottom on a regularly? Absolutely. The better you get at it, the better you'll be able to do that. So people do it all the time. So what I say to people is like, save those articles, when people make projections so that when the bottom comes, you can look and see who gave you the best information.
Yeah, that's a good idea.
Start, because I'm going to tell you what's going to happen when we reach that bottom. All the people that's saying, the bottom is in, up from here, and all that, their articles are going to disappear. They're going to be hard to find. And and suddenly everybody was, they're going to be saying, "I told you." So you're going to be like, "No, no, you didn't. You were telling me to buy 7,000."
That is a good idea.
So yeah, save this information and see. But I on balance, I think that was pretty responsible information or guidance. That what he said is under the 200-day moving average for someone who doesn't want to try to learn technical analysis, and they're okay with the price dropping 50% from here and likely recovering over the span of a year or less. I think that's pretty responsible information. So just know that if you can stand a 50% reduction from here, then go for it. It's probably, just don't. But see, you can't make that choice, then complain when the price cuts in half. You can't. So if you want to get closer to the bottom, then you have to start to learn technical analysis to go along with your fundamental analysis.
Now, what's your take on gold and the lack of volatility in gold prices?
The whole world is afraid of that, scared of it, terrified of it, and I watch it all day, every day, 9 ways to Sunday. I'm of the camp that gold is going to tank. That's it's overbought, seriously overbought. Whether you look at it on a quarterly chart, which is like every 3, which measures things in increments of 3 months, a monthly chart, a weekly chart, and it is overbought. Meaning, overbought roughly means that the number, when you get this many long people betting long over a certain amount of time. I'm looking at the stochastic chart or the relative strength index. It always means that it's gonna we're due for a correction, a reversion. So I believe that the gold, the low, my personal belief, just as I said in the beginning to everybody, I'm an extremist in my technical calls. Now, that doesn't mean I'm not right a lot. So you'll determine over time. I'm out there in public is saying that the bottom in gold is not in, that the low in 2016, that's not the low, that we're going lower than that. But for this first leg down, we're going to revisit that 2016 low, but not take it out. And then we're going to bounce up. We're going to do what's called an ABC pattern. Come down sharp, rise up about halfway, and then continue the decline down for the final bottom. And that'll be in perfect time. The way things are lining up, I would not be surprised if gold and crypto hit the bottom at the same time. Now, this corresponds with the strength of the dollar. See, what's really driving everything is the dollar. The dollar has been in a retrace, a pullback since the first week in May, because the dollar went on a vicious run from the middle of February up to the first week in May. And all of this right now, what's really freaking everybody out about gold is, why is it that the dollar is falling in this correction, but gold is not like really taking off? It's still trading within a triangle pattern. It has not broken out. And that's a symptom of not weakness, basically. If you can't be excited about gold when the dollar is falling, when can you be excited about it? The market is not confirming, not showing real support for higher prices in gold at these current levels.
Can you pull up a chart for over the last maybe 5 years, 1 year?
Okay, let me see
month.
Let me get my. Go ahead, y'all. Talk about something else while I get my stuff together and get the.
Okay, yeah, I remember I bought gold. I sold it. I sold the stock. I was on E-Trade and I bought. I don't know how I did it. I looked it up and I found out how you can back gold stock on E-Trade. I was trying to look up symbol, the trading symbol, and I cannot find it.
Let's see. I'm gonna pull up the GLD. I'm gonna do that. I usually look at the gold versus the Swiss franc, but it doesn't really matter. But I'll look at the GLD chart.
No, I know. What about silver? What's your take on silver?
The same thing that is good for silver is good for gold, which is a weak dollar. And we're just not in a season right now of weak dollar. So strong dollar equates to this rise in interest rates, okay? Because when the dollar, okay, see, it's a matrix. You got the euro falling. You have gold started its decline in 2011. Oil started its decline in 2008. So this has been, and the dollar's price low is in 2011. So this stuff has been going on. This correction in the price of in the dollar has been going on for a number of years. And so as long as the dollar is doing its thing, it's not going to be a good time for oil, energy, and metals. Let's see. Now let me.
Yeah, I've actually bought some coins. I think two. Yeah, 2 coins of silver. Cause I thought hey, it'd be cool, and I really felt good when I bought it. I got it. It's pretty. It got some weight to it, but as far as silver in terms of trading and so forth, I don't really have any insight on it. What about you?
Well, in terms of silver, I bought some silver, but then I found out it was a piece of chocolate.
That's funny.
It's just not cool.
Hey, hey, man, this is the first time I ever heard you laugh like that, man.
Okay.
It's terrible. Terrible.
All right. Can you guys see this screen?
Let's see here. Yeah, I can see.
Am I on?
Yeah, I can see it.
Okay. What we're looking at is the GLD. It's just one of the symbols that represents the spot price of gold. There's lots of ways to do it. This is a more pure way because it's not like relative to the Swiss franc or the yen or anything like that. But they all show you the same thing. But when I'm following gold, I'll look at it every kind of way. I'll look at GLD. I'll look at XAU, CHF, that's Swiss franc.
XAU. Yeah, it was XAU.
You want me to look at that?
No. I'm saying when I bought gold on E-Trade, the stock, it was XAU.
Okay. I'll go gold dollar. This is gold. I'm sorry. Why did I say gold versus Swiss franc? I'm sorry. I meant to say gold versus the dollar. So it's got some of my stuff in here. This is I try not to put up my noodling, because I don't want to have to get in and explain all this. But I'm saying that the price is going to fall down here to the 912. It might be 920 or something that by the time it moves up here. But I think we're coming all the way down. I think we're going to come down to this 100% line, go up to this 50% line here, then fall, and that will be the end of the wave. That will be an A, B, C pattern, and that will complete the wave. We are looking at a quarterly chart. So this is measuring every 3 months. Okay, and so we're just technically overboard is 80. So we're not at 80. We're getting pretty close. I don't know, are we?
Your screen share stopped.
Oh, it did. Okay. Let me see. I'll do it again.
There you go.
Okay. All right. So I'm looking at the stochastic chart up at the top here, and I'm also my eyes are looking at the information box on the left, it says that black line, the reading way at the very top under where it says date. That's the fast line of the stochastic. It's at 79.27. Overboard technically is 80 and above. So we're in that general area of it being overboard. You see this line flattening. So you're looking at a chart again that's measuring things on a scale of quarterly. So that's every 3 months. So I like looking at longer term charts like that. So because it takes out a lot of spurious movement, you can see the real trend. Okay. And so even here, you know, as the Elliott wave theory, we like to we know that the you have a downtrend, which is A, B, C, and then the retraces A, B, C, and then it should fall, it should come down. So, you know.
So the Elliott wave theory is ABC down and ABC up.
For corrections.
Okay.
So in the direction of the trend, it's a 5 count. But when you encounter trend movements, it's ABC. And so, and then within A, there's a, so like this would be the A leg. And within this A leg, there's a B, C. Okay. And so this would be the B leg. And this is kind of weird because it's the highest point is here. So this is really this is why everybody's confused, because it's a strange looking chart to begin with. And that's why with in technical analysis, you have multiple ways of getting the answer, because no one way will work all the time. And so you have multiple ways of determining the wave count, seeing if we're overboard. And so once you get like 3 or 4 different methods all showing you the same thing, then you feel confident of what's going on. But the biggest thing is that gold has not broken above. The high for gold is way back in the second quarter of 2016, way back here. That's the high, 2016. So the low was in the fourth quarter of 2015. So in this short little period, from the fourth quarter 2015 to the second quarter 2016, that short period, that was the gold run. Everything else has been essentially sideways. So we've been going sideways in gold for like 2 years. That's not what happens in bullish activity. Okay. So you can just tell yourself, oh, you know, gold is going higher, but no. This is what it looks like when it's going higher. It shoots up, man. This is indecision. This is reticence right here. And what's causing it? The dollar. Let me go to.
I want to say, hey, how you doing today, Nagon?
Let me go to.
So what was that low point for gold?
Okay, I'll go back to it.
Was it below 1,000?
Yes, it was around. It was it was around one something. You want me to give you the exact number? It was roughly 1,040 something, 1040 something. You want?
Yeah, I saw that. No, that's fine. That's fine. I just wanted to know if it dipped below 1,000, because I know at one point gold was down to like maybe 984. I think maybe 2014 or something like that.
It must be a different symbol you're talking about. It might you're probably right, but it probably was a different pairing of gold. You know what I mean? It might have been GLD or some other symbol you were watching. But on the one I was watching, XAU USD, no, the low was like 1040 or something like that, 1046 or 44, something like that. Let me see. I'm trying to show you it to something.
I just want to say this is what I've been looking for a very long time. Good talk about good insightful subjects, good tangible stuff.
Okay, hold on. My
didn't want to sound soft there, but I just wanted to say that.
My thing is going real slow here. Hold on.
Man, some good information, man.
What do we got here?
Yeah, that information certainly is good. I would have to agree.
How you doing today, Nate?
I'm not rocking with this
What's
chart.
going on, brothers?
Yeah, what's going on?
What's going on, Mike?
Okay.
Chilling.
What am I trying? What I'm trying to show is the rise, and I'm having like computer issues. My computer's like
You gotta
slowing
get up
down.
on that snob life, man.
Yeah, you
What do
know,
you-
man.
You talking about looking at the overall average rising price in gold?
Well, no, what I'm trying to show is this move in the dollar right here since February the 16th. Am I still screen sharing?
Yes.
Okay, so the low in this recent run in 2018 in the dollar has been started right here around February the 16th, and it just went on this vicious move. And this is the interest rate and all of that corresponds to this. The hell in the euro, the British pound, all of it corresponds to this rise right here. Now, this little decline since February the 10th is where we are right now. Now, this right here, I didn't see this today. Wow. Okay. This is interesting. You have you can see all of these candlesticks have a descending. Each one has a progressively lower peak, except this one. Okay, so that is suggesting that we already hit the bottom. That the dollar is already turned. We'll see. Let's see. This low is my chart is screwing. It's not telling me. I have some issues with this site. It's not telling me what this price low is, and so that I could confirm whether we have what I need to see is that the low here is higher than the low here, and so having a higher low is a sign of a bottom. Having a higher high is a sign of a reversal. So what you're looking for in a reversal is a higher low and a higher high.
Well, you're also looking at where the resistance level might be, and if it actually, falls below a resistance level, you're going to see rises above, and we can also see if it's going to be bullish. But my overall view,
as I said earlier, there's like a number of things we look at, and like I was talking about the stochastics earlier. So yeah, I'm just giving a rough idea, but go for it.
Okay. My overall view is, because I'm looking at gold and this kind of thing from a geopolitical perspective, and looking at just kind of what's going on currently. Gold is something that we should be buying regardless of the price right now at whatever levels you can get in at. And I'm not talking about gold. Because of the geopolitical issues that we're really having with the various economies and the currencies that we have going on.
Well, if you're willing,
right now when we look at, I'll finish up. Let me finish up very quickly. We look at the whole Bretton Woods issue and all of that's going on. We starting to see, all of this off gold standard stuff that came off of gold, but now we're getting into these, of course, for the last, since we come off the gold standard since the 70s, but now that we're in these highly irregular markets where these markets are running very high, the stock market's running very high, but it's not really sustainable to a large level. A lot of this is going to drop at some point in time. The only real cash that I think that's going to be valuable over time is going to be gold. And I think that, we are certainly in a, I would say we're certainly in a position where we're looking at a correction in the market. With the stock market, we're looking at because I'm looking at interest rates, and when I look at interest rates, I'm looking at more of the Fed's fund rate as opposed to the prime or anything else like that, where banks are lending, and they're starting to rise. Rates are starting to go up there, which is going to slow the economy down as time goes on. And then when they have to bring the rates down, are we really going to be in a position where the rates are going to come down in a way where you're going to be able to slow the economy down without going into a recession? So I believe that certainly is going to happen, because I don't think we have that there in the economy, enough room at the bottom to really drop interest rates too low. I mean, we can't rise them too high either. You're going to stop the economy. So there's a lot that's going on right now.
They're gone. I'm sorry. Yeah. I want to jump in, man, because I want to get back. I want to allow you a chance to understand the context of this segment that you joined.
But do you understand what I'm saying? As far
Yeah,
as
yeah, but you didn't hear the
okay,
beginning.
go ahead.
The reason why I'm being dogmatic about stopping you is just because I want to hear it, but this particular brief segment of the show is about the fundamental analysis that you're talking about, but this brief moment is for the technical perspective of it.
You look at the technical aspects of gold and where it's moving and kind of
yeah, in terms of when is the right time to buy it and that type of thing. And what I said before you came on is for what you're saying is correct for someone that is a if they use fundamentals to guide their investing in the absence of technical analysis. So your argument is correct, but but here's
based on what I'm saying is
hold on. Get with what I'm saying. This is my time to shine right now. It's about me. It's about me. Get with my program right now. And when I'm done, I'm gonna shut up and I'm gonna fall back and listen to y'all because I'm a different animal. Okay. And I appreciate. I got you, but no, I'm not railing on you right now. I just know it's the technical argument is alien to I think the majority of people have been trained to see things exclusively from the fundamental perspective. And what I'm trying to say is learn both. Learn the technical.
Yeah.
And what I said earlier is save all the articles for the people telling you to buy gold right now, is telling you to buy Bitcoin right now, because when this bottom comes, then you're gonna understand how you're gonna see how do you really feel, because you can't follow their advice then complain when the price drops. Okay, you can't have it both ways now. So the argument to buy because Bitcoin is below the 200-day moving average, or buy when gold starts falling or breaks out of this triangle, if you lose half your money, but make it back in say 9 months to a year, that has to be okay with you. If you choose not to study technical analysis, that has to be okay with you. You can't complain about not getting in at the bottom when you didn't do anything to learn how to get in near the bottom. So about gold, yes, I believe that we're in for a decline, because from these levels, it's going to break out of that triangle. And we're seeing here on this stochastic chart, and we're looking on a daily chart of the dollar right now, and we're down here in the oversold territory. And I'm not ready to say that this bottom is in right here. I have to look at it some more, but we're near enough to it that you fear the dollar. Okay. People buying a house right now fear the interest rate rising. Okay, because it's going up. I believe, my view is this dollar is going higher, so it's interest rates, and Bitcoin is going lower, significantly lower, and gold is going significantly lower, and oil is going significantly lower.
Quick question. You said for the people that are buying a house, fear the dollar, fear the interest rates. You said it because a lot of people are on variable interest rates.
That's one. Okay, let me put it like this: it's a supply and demand issue. When the dollar is rising, banks, the world wants the dollar. People in euros around the world want the dollar. The people with the British pound want the dollar when their native currency starts to fall. Okay, so in that environment, the law of supply and demand says I can charge a premium for $1. I can charge an interest rate. I can raise the interest rate. And that's what's happening. See, the fundamental view is that the dollar is rising because the interest rate is rising. The technical view is that the interest rate is rising because the dollar is rising. See, the technical view says policy chases the charts. The fundamental view says that the policy creates the price movement. We're never going to agree. The fundamental thinkers and the technical thinkers are never going to agree on that. I say you grab your umbrella because it's raining outside. It didn't rain because you grabbed your umbrella. Okay. Okay.
Okay.
But you know, but all I'm saying is keep note of who's saying what, and over time you're going to see it, because I started as a fundamental trader. Okay, nothing they said got me out of the market during the .com bubble. Nothing they said got me out. I sat there and watched my money come all the way down. And so I went and studied. I said, who made money when the tech bubble burst? Who made money, and what was their trading philosophy? And that's when I started learning about technical analysis. And I said, I want to be one of them.
Well, yeah, that's when I started trading. I started trading as a, as a technical trader, right at the end of the '80s, around '89, and then really went headlong into it in '92 when I first started with A.T. Broad in the New York Stock Exchange firm. But that's what I did.
So your technical view is that gold, that this is a let me ask you this. I'm not going to say that gold goes up from here. What's the downside risk to gold right now?
As of right now, I'm looking at gold as a hedge as to what's going to come in, which is going to happen. So at this stage of the game, I think that whatever price you get in, it's going to be a decent price, because I'm also predicting, just looking at how I understand the market fundamentals. I'm looking at the immense amount of liabilities that we have, and we don't have a lot of assets to cover a lot of it, and we're putting a lot of that under the dirt to try to cover it, which will come back which is going to come back up on us. And I'm just looking at what we're doing with our rates. We're going to have some big problems. So
yeah, and you know what Nagone is saying? You folks need to fear this. When somebody that's a fundamental trader like Nagone says that the major indexes they can't sustain these price levels and we're in for a severe downturn. When somebody that's a dyed-in-the-wool technical trading zealot like I am, when I say the same thing, you better run. When the technical traders and the fundamental traders agree, and we rarely do, when we agree, who's left to buy it?
Well, like I said, gold is a hedge. Whatever price you get in, it's all good, because what I'm saying, and we have to look at long-term buys, and I'm not long-term buys. I'm saying over the next 3, 4, 5 years, continue to buy small levels, but buy as it goes up, comes down, doesn't make a difference, because when things drop, you're going to have the only cash. So it's going to be worth 10, depending on how things drop, could be 100 times what you bought it for. So you're going to average out whatever interest points you came in at, and your profits are going to be huge.
And in that context that Nagone said, 3, 4, 5 years, I have no disagreement with that. In that time frame, if you bought gold right now, it will likely return. I'm telling you, you're gonna have a significant loss. But within that 3, 4, 5 year time frame that he said, you will make it all back.
No, you're gonna make, I would say, once again, I would say 10 times the damn near what you paid for. That's what I'm somewhat predicting, because I know that this market it's not going to hold for too long. It's not going to hold for too long.
Yeah, but I'm saying if you're a technical trader, you can get the bottom. It's doable to get. You don't have to be a great trader to get within 5 or 10% of the bottom. It doesn't take greatness to do that.
I agree.
Okay, and somebody that's putting in a few months of study and practice, you'll be able to be able to have that level, likely that level of proficiency, and your returns will be even greater than what Nagone is talking about.
Yeah. I certainly believe so, but this is to be averaged out. If you're day trading or you're short-term trading, it's a different story. The technical analysis game is pretty critical there, because you're going to want to follow the trends. You're going to want to follow when things, when you're hitting resistance levels, when things are breaking through resistance levels, when you see things trending downward, when you're looking at just the overall, price and currencies of what's going on with different currencies around. And the dollar, of course, is the big one. So you want to watch that very closely. But that could change daily, on a daily basis. So if you're daily trading, it's one thing.
Yeah, I'm not talking day trading. I don't even really discuss that on my channel.
You don't discuss that at all. Okay.
I don't discuss day trading. I'm not a day trader. I'm a swing trader and long-term trader. Okay. I'm not against day trading. My thing, just like I'm not against crypto. The reason why I don't deal with day trading is I think for people who are just starting out, day trading is the hardest thing you can think about doing. It is so hard. If you can't trade looking at a yearly chart, how you gonna trade on a 1 minute? So learn the rules in a long-term context first. And once you learn the concept, when it's slowed down, looking at a week, daily, weekly, monthly, quarterly charts, then you'll be able to go down and look at things in 15 minutes, 2 and 4 hour time frame.
Yeah, because you're trading in very small profits. Stocks, you're dealing in teenies, and this type of thing, you're dealing with very small profits, very, very quick, and you're in and out. But for the longer term, it's different. I look at things from the long term, and but so I'm following you. I'm with you. I'm with you. With what you were saying. You used to be a lot on BGS's Hangout. I haven't really seen you on BGS hardly anymore.
Let's you know what? That's another story. Let's
okay.
This,
It's certainly not trying to get into that.
Yeah.
But anyway, but he had good. But what I said, he had good information there that I remember him doing there as well.
Thank you. I appreciate it.
I'm gonna try to get Matty Ghost.
Oh, please get him on, because I told him I was gonna fire my channel back up just to interview Matty Ghost. He's killing it.
I'm gonna try to get him on.
What's he talking about?
Man, he is glued to them charts. He's trading. He's trading a lot of things, but one particular thing he was trading was a energy drink, and that sector is let's see, on this chart, y'all, on this chart, y'all, this is barchart.com. This is one of my 2 favorite sites. Investopedia is a great site. They have lots of education.
Very much.
And what I like about bar charts is this. Let me show you this. You can come here, you can look up, like, let's say I want to look at sectors. This is on the quick what folks need to know.
Okay.
These are the different sectors of the economy. All the stocks are in one of these stovepipe sectors, okay? Consumer discretion, that's what it sounds like it is. Cars and crap that you don't need. Consumer state, conspicuous consumption. It's not food, water, clothing, shelter, okay? It's fun stuff, all right? Consumer staples in a downtime and moment of crisis, that's where you want to be. Consumer staples is stuff you need for survival. And the beverage sector is one of those sectors that seem to do pretty well in crisis. And I'm comparing it back to 2007 and 8. So you can go back to you can go back in time, family, to 2007 and see. I'm bringing it up as I talk. You can go back in time on any chart. Look back at and the decline from like 2007 to 2009, and what you want to, and you can come here to this chart, to bar charts, and you can pull up these sectors. And like right now I have consumer staples selected at the top, and my thing is slow. And these are the constituents. Archer Daniels Midland. So everybody should have heard about ADM. ADM is what, they're like food and stuff, right?
Yeah. And
ADM is that, and they also one of the big shareholders in there are the Koch brothers.
See?
And they pay a good dividend.
There you go.
I think a 5% yield.
So all that
also with the preferred.
All
as
that
well.
processed food, you got Colgate, Palmolive. This is all the grocery store stuff. Clorox,
Kroger,
Costco. Okay, Campbell Soup is something
Hormel
about.
Foods.
There you go. And so
I think
Maddie,
Procter.
Go ahead, Mike.
Procter and
I
Gamble.
was just gonna say I think Procter Gamble controls most of those brands that you just mentioned. So it would be wise to invest into Procter and Gamble.
Mm.
Yeah, all of these are individual, independent companies. And so
Yeah.
this is where when the crisis comes that Nagone is talking about, you need to be studying this now because this is where the money is going to be made. All this other stuff up here is going to be hurting for the safe space is going to be right here. And Matty Rich was investing in a beverage company, and that thing is gone. It's like going through the roof, and it's like a penny stock kind of beverage. But to talk to him, to put him in this macro context that I'm talking about in this show, that the reason
you
what is
breaking
going
up.
You kind of breaking up.
Delaware.
Consumer staples.
You broke up a little bit there for like
Yeah. Just repeat that again.
I was saying that the beverages, it is a consumer staple. They're in the consumer staples sector. And so that's why Matty Rich stock was going up. That beverage one he's got is killing it.
Okay.
And so
I'm a definitely try to get him on here because like I'm glad, I'm glad we all thought about starting this channel because this is good information. This is
very good,
tangible information where you can and where we can come, even if it's a live or even private hangout. We still know who to talk to and get information, collaborate, bounce ideas off each other, and have some good tangible information.
Some of the dangerous stocks to look out for at this time are the I'm trying to find the something that gives me the whole market. Let's see. How about I go market performance? The high PE stocks.
High price
to earnings ratio. Okay, so when companies have good earnings, they can charge a multiple of those earnings, a premium of those earnings because they are. I don't even really see. This is the part I don't even want to link it to earnings because they're high PE stock. I've seen stocks with high PE. I'm like, how you gonna have a PE for a company that don't really have no earnings?
Well, that's still based on a lot of crap. But usually companies that have high PE ratios, they have good fundamentals in their companies. If you look at their their assets, minus their liabilities, they're not carrying a supreme amount of debt. So their fundamentals look fairly decent. So that's why they get the high, the high price and their earnings are nice. They're not carrying as much debt, but some companies carry a lot of debt and they got a great story and they're in a real fast growing market. So that can be adjusted a little bit. But anyway, go ahead.
From the technical side, I just look at it as they're popular. Whether it's justified or not, it's not important. It's not relevant. Somebody thinks, as I like to explain it, some girls you take to TGI Fridays, and some other girl you take to Ruth Chris, because you perceive her as being worth it. Now, she might not be worth it, but the perception is there that she is. Okay. And so let me see. Here's the fundamental. So also on here you can see, you can look at things in terms of technicals, fundamentals, all of that. So I'm pulling up something here to give me an idea to be able to see. I like to say you can sort by PE because when the market declines, the high PE stocks, they're going to get killed.
Now, Dollar Will, is it possible that you can chart out oil? Because earlier we were talking about some of the hostilities of what's going on in the Middle East will cause a spike in oil prices.
Okay,
And
I will. I will. I just want to point this out. Amazon. You see, I've sorted by PE ratio. Amazon right up here, the fourth one. Amazon is the largest retailer.
We can't see anything.
Oh, I'm sorry.
Yeah, and they're slated to do some hella shit. So they're
that is 1-2 watch, buddy.
Yeah,
that is your retail sector. There's no store bigger than Amazon.
Yeah, Amazon's no joke.
What do you mean by, well, what do you all mean by want to watch?
You need to watch what's going on with that stock price, because if people start selling Amazon, or for you fundamental investors, listen to the earnings report. Now, see, the charts will tell you that will reflect that people are abandoning the stock. You're not going to know why. The fundamental analysis will tell you why, but the chart activity will precede the fundamental story. So if you want to know why, you need to get into the earnings report and all of that. So if Amazon has a lower earnings quarter over quarter, that represents the entire U.S. economy, because Amazon, or the retail sector, because Amazon is the largest store. It's the largest retailer.
They're trying to corner a lot of shit, boy. They're cornering a lot of stuff. They're, it's pretty strong. It's a strong company for right now. So let's see how it goes. But you're right. Look at the fundamentals there. One of the things that I used to do when I was doing a lot of trading and I was on Wall Street. We were always looking at who was buying, and who was selling. We could see that. So
right.
The large institutional. Yeah. Of course, I was level 2, and then of course, then when I was making a market in the stock, I was on level 3 because I was on the bid. But with what we were looking at, if we were going to invest in something or buy a position, we followed, the fourth market kind of Instinet. We were looking at that very closely to see who was buying a lot on the block trading side, who was picking up a lot, who was selling. That gave you an idea as to where things were going. So we used to try to move with the institutions a lot. And I don't know if people are able to do that as just individuals here. I think you can watch it. I don't know. Investopedia, these kind of things might give you a little idea on that. But follow some of the big block guys out there, that the big funds and some of the larger banks, and see kind of the positions they're picking up. I think that makes that's a way to follow. I don't know if you look at it that same way, Will. I don't know if you ever looked at it that way. That's just kind of a question.
I'm not invalidating that way of looking at it. That it's valid. But the way I look at I might put a volume chart up. I see a big volume spike. That tells me that a whale made that move, because no small person can move the market like that. Now, I don't personally need to know any more than that. I don't need to know any more than that. Right. But so we're saying the same. I'm with
very good.
So you were with the big whales and in the big time. So you had extra tools and stuff. So
we were on the ILX, and we were like I said, we were making markets. So you were level 2 and then level 3 when you were setting the bid and ask price, of which I was making markets in some of the stocks I was that we were moving. So okay. I mean,
I'm having difficulty with my computer here, but as you see here, can you guys see this chart?
Yep, I'm just gonna mute myself 1 second. I'm gonna mute myself. Go ahead.
Yeah, I'm trying to zoom in, and I'm having issues. But this symbol is USO. It's the United States Oil Fund. I have a support. It stopped again?
It just stopped.
Crap. Okay, I'm gonna get it back.
Dollar, are you using Google Chrome?
Yes, I am.
There's the latest update that went out today, so you might want to hit the update on your Chrome and then restart Chrome.
Okay.
I'm
gonna finish this up.
It's because you're a Dallas Cowboy fan. That's why.
We're not gonna get into that. I'm gonna start a channel about it, man. I'm gonna start a channel talking about my Cowboys to drive some traffic I'm gonna use that to get people to talk about stocks. I got to get an audience, man, because you got to do. People don't want to talk about this money, but I got to get them on it some kind of way. But anyway,
well, that's because you're a snob.
Oh yeah,
I'm a snob. That's right.
That's right.
Now, I try, man. That's when people call me a snob and all that stuff. I tell them I try. I'm working hard at it. Let's see. 620. So June of 2017 is when oil started this ascent. So that's a year ago. Okay, so I have this black line here as a support, and the price is sitting right at it. Unfortunately, I cannot get this thing to zoom in.
I see it.
And so if you bring it, so that black line there is me.
Okay, is that black line a trend line?
That's my trend line I put in there.
Okay.
And we're resting right on it. And this stochastic is pointing down. So when I say this is not my opinion that it's gonna fall now. This is what the chart is showing.
So if it, in your opinion, if it breaks your trend line, then it's gonna start to fall.
Yeah. Now, how far will it fall? That's where it gets debatable. My argument is we're going below this point here. We're gonna crash through that. That's my argument.
Where they red dotted?
Yep.
Okay.
Yep. And so that would be in point in time. That would be February of 2016. So we're going to take that. I believe we're going to take that out. Just as I said, remember earlier I said gold had a low in 2016. We're going to take that out too.
Now
it's not over. This decline, again, for perspective, this decline started. Crap, hold on.
Now I see what
decline started in like 2000 and oh crap. The decline in oil started in 2008. See, a lot of people wasn't even trading cryptos back then. Okay, so they joined the market. Their attention turned to the markets when the game was already in process. Okay, the oil had already started falling in 2008. Gold and the euro started falling. I think the euro might have started in 2008 also, but gold started falling in 2011. So we're like 7 years into this. It's not over.
Now I see what you mean when you say, I'm starting to see more. I'm trying to say when you say, you can't buy the bottom, you can't predict the bottom, but you can get within the X amount of percentage of the bottom.
Right. So what happens when we finish this final leg down, I'm going to look for an ABC pattern, and then I'm going to have all these oscillators up, and of course I'm going to have a trusty trend line. Okay, so the final way to be sure is to put up the trusty trend line. And so if you wait for the trend line to break, price will break through the trend line. And then it'll come back down and touch the trend line. You'll be about 10% or something like that from the bottom, So you don't have to buy now and let the price come all the way down here. And then, you can study the charts and learn and get it at a better price. The same for gold.
Stop the screen sharing, just let you know.
Yeah, okay. I think you're probably near done with my segment so that I can get my software updated.
Okay, now to segue into what we just talked about, to do my screen share. Let's see.
You want me to end my screen share?
Yeah, you can. Then I'm starting mine.
Okay.
Let's say Dow drops 250 points on Trump's tariffs. This is from CNN Money. Wall Street trade war fears are back. President Trump's move to impose tariffs on steel and aluminum from Canada, Mexico, and the European Union drove the Dow down 252 points on Thursday, or 1%. The S&P 500 and the NASDAQ lost 0.7% and 0.2% respectively. Trump is placing a 25% tariff on imported steel and 10% on imported aluminum. The tariffs will go into effect at midnight. Investors worry that trade restrictions will raise costs and dent profits for companies that rely on the materials to produce their goods. Wall Street is also on edge about retaliation. Stocks plunged after Canadian Prime Minister Justin Trudeau announced steel and aluminum tariffs against the United States. Europe and Mexico also announced plans for countermeasures. In addition, the Trump administration is pushing ahead with plans for tariffs on $50 billion worth of Chinese goods as punishment for intellectual property theft. Uncertainty surrounding tariffs on Chinese imports is a source of concern for some retailers that have operations overseas or use imported goods, the Federal Reserve Bank of Cleveland said in a report on Wednesday. The stock market is having a turbulent week. The Dow Jones lost nearly 400 points on Tuesday on fears that political turmoil in Italy could bring chaos to the Eurozone. It made up almost all of that loss on Wednesday. On Thursday, 29 out of 30 companies on the Dow lost ground. Caterpillar was the worst performer, shedding 2%. Caterpillar executive Amy Campbell warned in March that tariffs will be negative for selling the company's construction and mining equipment overseas. Banks also struggled. Goldman Sachs and JP Morgan fell as investors sought a haven in the bond market. The yield on the 10-year U.S. Treasury dropped slightly to 2.82%. Lower yields make it more difficult for banks to make money from loan interests. At the same time, steel and aluminum stocks spiked. The tariffs are designed to make U.S. companies' production more competitive against foreign steel. Webco, a steel tubing manufacturer, led the charge Thursday, surging 6%. U.S. Steel jumped 2%. Nucor, the largest American steel maker, also inched up. Aluminum producer Century Aluminum moved ahead 2%.
Can I interject?
Yes.
All those are metals you're mentioning, steel and all that. They're all in that metal sector. And so again, when I say those energy and metals have an opposite relationship to the dollar. So that dollar decline since May, I was showing you, that gave strength to energy and metals. And metals is gold, steel, all of that's under metals. So those are all very dollar sensitive items right there. So they need dollar weakness. Gold and steel and silver and copper, they are palladium, all that stuff. They need oil. They all need the dollar to be weak.
Okay. Go ahead.
So if the dollar turns around and takes out that high for May 5th, you're gonna see, because it's sitting like right at a resistance. So if it breaks through the high, the dollar being, if it goes above the high that it's set in the first week of May, all of the computers that set to trade, automatically, they're gonna freak out. That's another thing to realize. This is not the way that the world works now with big money at these institutions, these mutual funds. It's not a human being sitting there making these decisions. They have a computer program running it.
High trade, what you call them? High trade something.
Well, that's the high frequency trading is different. It's the same concept in that it's a computer running it. But they all know what it means. If that price goes above that May peak, that would mean that we go to the next extension, next Fibonacci extension higher, which would essentially put the dollar in a position to take out the high that it established back in a year ago, back in December of 2016.
Okay, now I think I think I'm starting to learn, since overseas governments put tariffs on American steel,
Yes.
that that weakened the dollar in their country.
Well, according to the fundamentalist view of things, yes, that's the
Okay,
way they look at it.
with,
Now,
with,
of course, the technical view, we look at it the other way, that the rise in the dollar made steel weak.
which the rise in the dollar made steel, which in turn sent the signal to investors to invest in steel
Correct.
because
Look at it this way. This is back to some of those those videos BGS was putting, where he been putting up about the history of the dollar and the gold standard and all that stuff. If you got money and you want to preserve your purchasing power, you have this historical relationship between currency and metals and energy. So if you want to preserve the value of your money or your wealth, let's put it in the abstract in turn, call it wealth. If you want to preserve the power of your wealth, then you need to know whether you need to hold your wealth in dollars, or whether you need to store your store your wealth in energy and metals. So those charts help you preserve the power of your wealth. Because if you're holding your wealth in dollars and the dollar is going on a long decline, you're getting poorer. As I like to say to people, that's why Americans don't travel to Europe as much as Europeans travel here. Because historically, their currencies are stronger than the dollar.
Well,
It's aberrant. It's
you
aberrant.
always
I want to hear what you're saying, Nicole, but it's aberrant for the dollar to be more valuable than, say, the euro or the Swiss franc. But it happens, and we're in one of the and in 2016 December, the dollar went above parity. The dollar was stronger than the Swiss franc, and I'm saying we're going back to that. And in this period when the dollar devalues these other currencies, this is when you get all this talk about, we want to get us another, we want to not have the dollar as the default currency and all that stuff, because usually it works in their favor. So when the dollar is falling, holders of the euro and the Swiss franc, they're getting richer.
Well, it's also, you're looking at a function of trade. If your dollar is a little bit weaker and then they have a stronger dollar, that will bring a lot more of their currency and their money into this country, into our economy. That's what that means. If our dollar's too strong, then it means that people cannot, other countries, other nations can't buy that easily from us and borrow that easily from us as well. So there are a lot of issues with that. So you always want to keep, balanced payments. You want to keep the dollar and any other currencies somewhat in parity, because you want to encourage a lot of buying. Because if your dollar's cheaper and that dollar's stronger in another country, they're going to buy a lot more of what you have, and a lot of that is going to be U.S. Treasuries and such for countries to kind of really come in here and invest.
Steering it back a little bit to what Linnell was talking about, the context being the steel article he was reading. If you are a steel company and the dollar and you have a technical analyst on staff and he tells you that the dollar, and if your technical analyst came to tell you in 2011 that the dollar is going to make a severe move higher and it's going to be marching higher for a number of years, okay? And you are a oil company or a steel company or a gold mining company, that's not a good message that you got right there. So the first thing you want to do is you want to get rid of your inventory. So companies got this steel and they're trying to dump it on somebody. So this is when Trump says, no, you're not going to dump it here, because as the dollar rises, the person that's holding all this inventory, they have to sell the steel for less money than it cost them to acquire it.
Yeah, because they're starting to lose money because what they may have gotten it at is now they're losing profit on that. They're losing a lot of profits.
Right. So
with that rising a lot higher.
Yeah.
And you're also flooding the market as well.
Correct. So just from a trading perspective, looking at that charts allows you to know when you want to ramp up your inventory and when you want to scale it down.
Yeah. Okay.
So that's why I say we seem to get mysterious oil spills at these times when the dollar is rising. Just funny things start happening with the inventory because everybody's in a race to what they call a just-in-time production. You want to get down to that so that you selling it as you produce it. You don't want to have to sell it from the inventory, because all that stuff in the inventory costs more money than the market price. So you kind of screwed. So inventory control, that's a vital part of any business. And if you're trying to run a business and you don't have somebody that can tell you about technical analysis, you courting disaster, because you need to know about those macro economic cycles.
Yeah. You got to watch them close. You want to watch them close, but I always say one of the key things, and the dollar Will did mention, Nels, always watch interest rates as well. Interest rates are very important in a lot of this, because that's going to determine the price of your money.
Yeah, because I showed, was it the yield chart I showed on BGS show? That yield chart had started falling in like 1982. I was in high school then. 1982. That thing broke a trend line, man. That has been enforced since 1982.
Yeah.
That's a serious violation. So you don't even have to debate at that point about what's going to happen with these interest rates. Okay.
Yeah.
And so when you're looking at the housing sector, home sales are gonna. I don't see a way they can not be affected by that, because fewer people. It's going to get harder to qualify as the interest rate keeps rising.
That it's going to slow the economy down, because like I brought up the Fed funds rate, and that's the lending rate from bank to bank, which is which is the rate you're going to get. That's going to be far beyond what the prime was. It was almost zero. You had these zero rates, so now you got to raise them up a little bit, and then you're going to slow the economy down, and just because you're raising rates, so your money's more expensive, so it's going to slow things down. But as you have to bring it back down again, how much room will you be able to really go to kind of keep the economy high? That's what I'm saying. It's it's not a game right now.
It's not a game. It's not a game. And what Nagone is saying is like, everybody's familiar with the concept of other people's money. Companies expand and grow off of borrowed money. You go to the bank, you get a line of credit, and you open up that new division, and you hire, 20, 25 or 50 more workers. Those workers need desks and chairs and cubicles. They need a PC. Okay. So all the things that's sitting at your desk, that comes from borrowed money from the bank. And that trickles out through all of the economy. So you got your job. Now you want to go you gotta buy new clothes so you can look good every day. You got a car to get you to work. And now you think you deserve a new house. And so it's just that interest rate and that and the ability to borrow money easily fuels the economy. Now, when that interest rate starts rising, it's a hindrance on getting that cheap money, and everything slows down.
Yeah, you're gonna slow,
especially on Black people.
That's right.
Yeah. It's going. Well, Black people. A lot of us are trying to just survive on. The problem with a lot of us who have a little bit of money, we are we are extended out on credit so much that we can't get past a lot of our debt services. So that's another problem, and then the rates play very heavily with your debts as well. So that's what keeps us down. That's why I really believe, I don't want to get off topic, but we should use credit cards, these things as little as possible.
No, I think your topic is related, and that's why I'm saying that's why I want people to understand technical analysis and the significance of the U.S. dollar and how the movement of that dollar affects interest rates. It tells you about business cycles. Those business cycles gives you an idea when companies are going to be hiring, when they're most likely to be laying people off. So you get the time major decisions in your life, like when to buy a house, when not to.
Yeah. We
always get caught on the wrong end. When companies got huge inventory, whether it's homes or cars, what do? They look for the uninformed members of the public, and too many times that's us. And that's when we end up getting these mortgages to buy these homes, because the market knew that it was at the top. They did not want to carry that inventory. We have the same thing going with cars right now. They give cars away because they would rather you be stuck with it than them.
And that's the next bubble you have, because they did it with houses and then they did it with cars, and we're seeing that now. They gave people all these cars. If you're making $55,000 or $60,000 a year, you should not be driving a $60,000 to $70,000 car. And you have all these people doing this.
Yeah.
And of course, their payments are going to be high, their rates, and of course, their rates are going to be high on those vehicles as well, just because of the interest rates you're going to get. So they gave you these cars for very little money down, but you've got these these high payments and and you're paying most of it to your debt service on the interest on the loans. So you're finding people over a period of time are not going to be able to pay those back. And they're already seeing all these loans flying back at them already. They're coming back in large numbers, and they're trying to bury that, this is why I say there's going to be another very key drop in the market, because the same kind of, how would I say, the same model that they use for houses, they use for cars, and it's acting and doing the same things, coming back with a lot of defaulted loans on cars and so forth, and it's really not good. So it's going to.
That's what you were saying, Mike.
Yeah, we had a discussion about this last week on both Ulysses Hangout and on Lionel's Hangout, that we're seeing 45-day defaults on new vehicles.
Yeah.
So Repo Man is making his money, and he's snatching those vehicles right as soon as they come off the lot.
Yeah.
But the problem is now you got all the shit on the banks, and they're not going to get their money back on the banks on these loans. And even though a house may be $250,000 or so on a loan, a car maybe say $30,000 or $40,000, but 3 or 4 cars is going to add up to damn near what a house is.
Yeah, we can see it, Dollar Will.
So you're running at the same thing. But anyway, go ahead. Go
I just want to show this one thing real quick, and then I think I'm done. This is what I'm watching. This is the ETF called IWN. It's the Russell 2000. That's the small caps. And back to Matty Rich. He was in. I guess that would be considered a micro cap, but that's included in this 2000 here. The small cap has room to run. I think that's what's keeping the markets up. So there are many metrics.
There's room.
Right. You can sort the markets by industry. You can sort the markets by the main indexes by market cap, which is size of the company. Technically, it's actually let's say market cap is how much money of the market has that company captured. Okay.
Yep.
So let's look at it that way. But still, when you got small cap, mid cap, and the large cap. The large cap is the S&P 500. That's the 500 largest companies in America. Now, the small caps, the smaller companies grow faster. So there are people right now making money in these small caps. Well, we got a ceiling coming, and I think that's That's what I'm looking at. So look out when this small cap gets up to this 187. Right now, it's at 164. So what is that? What are we looking at? About 10%, a little more than 10%. From 164 to 187, my math is failing me. So 16 would be about 180,
That's
a little bit
17.
more, a little more than 10%, right?
4 to 187.
Yes.
It's 27%.
27. Can't be.
164
to 187.
Yeah.
So 10% would be
174.
80. 10% would do.
Oh, so you know what? I'm doing regular arithmetic over here.
Yeah, let's just roughly call it 11%.
Okay.
11%.
About 11%. Yeah.
So that's all that's left. And so we're looking at a chart here from 2009, the big run, and the wave count, for Elliott wave theory would be 1, 2, 3, 4, 5, and that would be it. And so I think that's why the market's kind of, still got some life right now, but not much. It's not worth it. I call this pennies on the floor. You have much more to lose than to gain.
Is that how you got the ceiling with the Elliott wave theory?
Say that again.
The ceiling, the 180, the 187.51, that ceiling, is that how you got that?
I'm using this Fibonacci chart, this Fibonacci extension right here.
Okay.
And this extension is taking me up to 187.51. Now, is it exact? No. All these tools are just to give you a rough idea. And they're not
right.
Okay, I'll be the first to tell you that. So it's not just this one thing. I'm looking at this Fibonacci extension. I'll also put a trend line here.
There we go. There we go. There we go, Will.
I got I'll put up a stochastic oscillator. Okay.
There we go.
I'll also see a bearish engulfing candlestick, meaning
there we go.
We'll get up here with a green, then we'll have a red candlestick that'll be bigger than the previous green. So it's a number of things. By the time I see 3 or 4 of those things happen, that's when I go public and say it's over.
Okay.
So by the time I come out and say it's done, it will be because I've seen 3, 4 signs. But I think that this small cap index is what's fueling the market because they have more to go.
They have more to go, and plus a lot of those small cap companies that are doing quite well, fundamentally strong. The ones that are doing that, they've got some nice profits.
Mm-hmm.
And they're not carrying a shitload of debt. As much debt. So they deal with fairly decent PEs and so forth. So some of the small caps are good.
But if we get a 1% movement, if we get a 1% movement a day, what are we talking about? 2 weeks?
Yeah, 2
weeks. This ain't no time to mess around.
Nah, man, you're right about that. And let me ask you this too, Will. And this is for the crew here. What is your view and just overall for just general? What's your overall view about getting involved in utility stocks? How do you feel? How do you feel about those?
I reckon I'm sorry. When I said consumer staples, utilities is also highly recommended. Okay, that's another sector to keep your eye on.
And would you like to tell them? Would like to tell them as to why?
Because it goes with my opinion that the strong dollar is going to kill the price of oil and energy, and utilities are consumers of energy. So they need to buy energy to run their business. So the cheap price of energy is going to feed the profit, going to feed the bottom line of utility companies.
Okay.
Well, so up to a certain point, utility companies make good money off of cheap energy, their source of the commodity they use to run their business. So they will have a long way to make profit.
Well, utilities tend to they carry a lot of liabilities, carry a lot of debt, but they're very stable stocks. So
they're not going out of business.
Yeah, they're not going out of business. Their price tends not. They're not giant price fluctuations in them because they're very stable stock. And a lot of times, they, utility stocks also pay dividends. So people like to invest in them because it's a very stable investment. So that's just the reason why I think a lot of people hold utility stocks in their portfolio as well. But I just wanted you to kind of, maybe expand.
And also when this decline, when this break happens in oil, you keep your eye on things like airlines. A lot of times they start going up because the fuel is one of the biggest things they need to run their business. And when the fuel gets cheaper, that feeds their bottom line.
Yeah, it plays into that. Politics plays into that as well. There are geopolitical factors play into that as well. But there are a lot of things that go into it. I think airline stocks are very, 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 very volatile. Certainly during 9/11, and I was trading very heavily then. Oh my God, man! Once those bombs went off and those planes went in, that shit crushed the industry for a while.
What I love about the technical camp.
Couple of planes went down, and boy, it damn near tanked the market.
What I love about the technical camp is write down this stuff I'm saying. Pull up your own charts. Take the oil chart. Learn how to use the compare feature. On this chart is here, and you can put up Southwest and some other airlines, overlay it with the oil, and you will see that relationship between it's not exact, but you'll see, generally speaking, it favors them.
Quick question. Some of the tools that you mentioned was the Fibonacci line.
Yeah, Fibonacci extension tool. I get it right here.
Yep. Very good. That's good. That's good shit there, Will.
I get it here on the tools.
And you said
it's called retracement here, but it can work as an extension or a retrace. Okay, you see right here, it went to the 100 line. A key Fibonacci level was 61.8% retrace from the peak. It went exactly to it. Price went exactly to it and went north. So once you get into this and you see this kind of thing happens, and you read about, hey, look, man, there's a structure and a timing in the universe, man. They say math is the language of the universe, and when you start trading, you will see it.
Said the Fibonacci line, the Elliott wave theory, and what were the other tools that you mentioned?
I would say learn some Japanese candlesticks. I deal with just the engulfing patterns, but learn as much of it as you can. But I don't really use all of it. I primarily look for the engulfing patterns at the end, what I think is the end of a trend. So combination of a trend line, which is as simple as it sounds, like is my chart still visible?
Yes. So
like this, for this small cap. So a violation, the price dropping below this line would get my attention. And this is a quarterly chart. This is, that would confirm for me that this trend is over. That the bounce off of the 61.8 is over. And we're at the top. And we will have had 5 wave counts, and that's it. That's done.
Will, how would you explain to him the head and shoulders top and bottom formation? Would you talk to him about that as well?
Let me see. How do I think if I can draw it. Do they have a tool for me? I don't know how to draw it on here. Man, what's a good way? Here's what you do. You go to my favorite site. I'm just going to type it in. You hear these things online and people say these things, just Google it like you would anything else, any other conversation, and you'll get to see it, and you see it right here. So the price will go up, come down, then make its final high, then it'll drop. Damn. Okay, yeah. Then it'll drop. So you have left shoulder, head, right shoulder, and you draw a line between the two. And so that's the head and shoulder. Confirmation is when the neckline is broken. So all from here and here, when I see it bounce up, I'm thinking, maybe we'll get a head and shoulder. Maybe we'll get a head and shoulder. I'll have a trend line here. And when I see it turn around, then I'm thinking, yeah, I'm playing it to fall at that point. A lot of people will buy right here, and they'll put a stop loss right above this high. And
Okay.
and when it breaks this neckline, you making money. This is where I think day trading is not worth it, because when you break a neckline like this, the price is falling a long way. So you might as well just make all the money. Just take your hand off the trade button and go sit down. So I'm not gonna be right all these micro times every day. Just go sit down somewhere and make the money.
So if it breaks the neckline down and people bought at the height of the right shoulder, they are losing money, right?
Absolutely.
Okay.
Yeah.
Absolutely.
But it's also a trigger for you to understand when to go bullish on a stock, when to buy, or when to look to kind of get out of a situation, or not to get into it. So this should be somewhat of an indicator for you, as to how you play it. That's why I wanted Will to explain that to you.
Yeah, another strange thing is a lot of times you'll have a trend line like let's imagine a trend line right here. A lot of times the price will break the trend line. I teach people don't erase that trend line. So even as this price came down and took out our imaginary trend line, I say leave it there, because what happens is the price ends up running back up to the trend line. So if you look here, a line pretty much comes right here, price. So this trend line was functioning as support, and the saying is support becomes resistance. So it was the floor. The trend line was like the floor while the price was going up, but it became the ceiling once the price went through it. So the trend line can become support, can become resistance. Now so that would be, so even if I didn't even know about Head and Shoulders, I would go, okay, so it broke the trend line, it went right back up to it and fell below the neckline. And then somebody that knows about Head and Shoulders say, hey, you got a Head and Shoulders pattern. And so that would be a second reason. So, that's when you get to sound, you want to sound smart. You go on StockTwit and all the stock trading sites, and you go, we have a trend line violation, broken support serving as resistance, and a Head and Shoulders pattern. And they go, wow, he knows his stuff.
Yeah, but you don't even have to go and tell anybody, as long as you can recognize for yourself.
There you go. Right. But you honestly, you do start to feel good once you're able to notice this stuff, because you're like, okay, I'm getting it, I'm understanding, And when you start hanging out on those trader sites, you learn from other people. That's the beautiful thing about it. People are like really giving with their knowledge, and I'm on sites, I'm on Facebook groups and stuff like that, and there are people, of course I try to hang out around people that know more than me, because they'll find things, and they're using techniques that I don't use. And so a lot of all this time when I haven't been busy on my channel, I'm learning. Okay, I'm trying to use techniques that are new to me, to see if I can just be a little more successful, get a little closer to calling those bottoms than 10%. I'm trying to get within 2 or 3 days of calling the bottom.
Nice stuff, Will. I approve of this message.
Oh, that means a lot coming from a guy who actually worked on Wall Street. Can I ask you a question, Nick? Have you ever been a prop trader?
No, prop trader, no.
Yeah, I'm considering that. I'll see, maybe in a month or so. For prop trade, proprietary trade, these trading firms, they give you their money. You trade with their money, and you have, generally speaking, a 80-20 split.
Yeah.
So meaning you keep 80% of the game.
Yeah, but that's it's tough to get into the right spots. It's just there's a lot to it. But as I said, I would trade on my own account at this stage. And, I'm not, as of now, I'm not an active Wall Street trader. I got out of that some years ago, and I'm involved in the IT market now. And what I do is IT project management, business, and we deal in the banking industry. So we back up a lot of the trading systems applications and so forth for banks. A lot of C, C++, and .NET and all those type of programming that really backs up trading systems applications. So I know a lot about that. Yeah. So.
Yeah, I got a buddy into that. I got friends in networking. I got another buddy who's got one of them high level security certifications.
Okay. All
So
right.
he's
Yep.
into that with a CSSP something.
CISSP.
Yeah, I just
Yeah,
know
there you
they
go,
make
Mike.
a lot of money.
Yeah, there's a lot of money in that, man.
This guy
definitely...
was killing it so bad. He turned down a job because it was too far from the subway. I was like, what? This is in DC. So it's like it's so many jobs that for him there that he wanted the job that was the most convenient for him to get to. And so he held out, he got a job that was like maybe 2 blocks or whatever from the subway to make it easy for him to get to work. I'm like, yeah, that must be nice.
That's butter laid. That's butter laid. Butter laid. Yo, listen, you guys really rocked it here, man. This is what I call real good shit, and this is what I'm into. These other hangouts are fun, but this stuff is what really I'm all about.
Yeah.
And the whole thing with Ghana and going to Africa and and getting involved with the business there and all that that's separate from what we're talking about here, but that's those are my plans for the end of this summer, coming into the fall, and I plan on fully executing on that, and hopefully I can get some other brothers to get involved in that as well, because certainly let me see it, complex design, but my man what's why am I
Oh, I'm with the
Ulysses?
program. When I get my money right,
Yeah,
I'm out of the United States too, and Ghana is on the list.
Hey,
yeah,
man.
kind of moving around a little bit, get involved in that. I see Mike V. He seems to be real sharp on a lot of this stuff, and a few other brothers. So, just not Ulysses, but Noah and a few others. So, we're really talking about that. That's where my big interest is right now, kind of overseas and kind of developing business there from a manufacturing perspective. But I think this is what we brothers have to do. We have to talk this business stuff all the time. Um, um, that's very important for us to do, and for us to get more business savvy. And hey, Will, like I said, I used to see you on the BGS hangouts a lot, and now you're doing what you're doing here, and I thought you had a good handle on things, and it's good. People should be talking to you all the time about this, because that adds a lot of value. So that's what I have to say about that. Good shit, brothers. Good shit, man. Good
Any
shit.
other closing remarks?
No, I don't have anything else to say. I think that's about it. I've got somebody here hanging with me for a minute, so I got to bounce off. So what I want to do is say, great. Please invite me to the next one. I should have a little bit. I would like to add a little bit more to the mix, if you will, on some technical stuff. So that's what I'm looking forward to do.
Nagon, Monday is automation.
Mm-hmm.
Automation. Okay, I had to say I'll be there. I'll be there. All right.
No doubt, man. Have a good night. Peace.
My brothers, you guys have a great night. All right, Will. By now, all you guys, awesome. See you.
All right, cool. Later,
Any
man.
other closing remarks?
Nope.
All right. Well, thank you all for joining the Money Talks Friday hangout. Monday is automation, AI, and VR. And with that said, y'all for joining.
All right.
All right.
Later, man.
Have a good Friday.
All right, later.